Hi everyone, welcome back to my channel. In today's class, we are going to solve A-level accounting paper 22 May-June 2019. Question number 1. Lee, a sole trader. Lee, a sole trader, provided the following information on 30th April 2019. They are given the information with some adjustment, the details with some adjustment. What is the question? Question A. Prepare Lee's income statement for the year ended 30th April 2019. 30th April 2019 means what is the starting date? Starting date must be 2018 May 1st to then 19 April 30. This is our accounting period. Clear? So, income statement means we have to calculate the gross profit and net profit of the business. So what is the equation to calculate the gross profit income statement? What is the equation income statement? We calculate gross profit in the trading section and net profit or end of profit in the income statement. So first we have to calculate sales minus cost of sales. Sales minus cost of sales is equal to gross profit. Then cost of sales is equal to, what is cost of sales? Cost of sales is equal to opening inventory plus net purchase. So net purchase is equal to purchase minus if any return, purchase return minus if any drawing by goods plus carriage invert. So then we will calculate the gross profit of the business. So let's say first sales. Sales means we can do the sales or revenue. Here in the question given bank overdraft capital, sales or revenue. They are given revenue. 165,000 is the revenue. Then any adjustment. Before entering, we have to check the adjustment. In adjustment 1, invoice of supplier, that is the purchase. Adjustment 2, inventory, valued cost. Adjustment 3, talk about revenue. Adjustment 4, no. Adjustment 5, no. Adjustment 6, no. So before starting, it's very easy. You do like each one, which is each adjustment, it is affecting what. Okay, so it will be more easy for you. So the first one, invoice supplier costing goods not being recorded in the books of account. These goods were unsold at the year end. So it will be affecting the first one affect purchase. Second one, inventory was counted April 2019 and was valued at cost 21,940. That is closing inventory. Third, revenue included credit customer 3,200, sale or return basis, goods were invoiced. So this will affect our revenue. Then the fourth one, During the year, Lee took goods with a cost for his own use, drawing. So we write drawing. Next, loan interest, loan and loan interest. Loan interest. A debt of bad debt. Because each adjustment when we are doing, it's easy to find. The provision for doubtful debts. So, provision. Third, computer bought Office 1200 has been debited to purchase account. So, it affect purchase. Then depreciation. So, it's very easy to do now. So, we can do the first one, revenue. Revenue is coming in the third adjustment. Revenue included goods sold in 1st April 2019 to a credit customer 3,200 sale or return basis. We will not include the sale on return basis goods in the revenue. So revenue is equal to 165,000 minus 3,200. So first one, revenue. Amount is 165,000 minus 3,200 is equal to 1,61,800. Next, we have to do cost of sales less cost of sales. Cost of sales. What is the equation of cost of sales? We are given here. Opening inventory plus net purchase. So first we have to enter opening inventory, then net purchase. So what is the amount of opening inventory? Opening inventory must be given in the question inside. So here the inventory at 1st 2018 12,500. So first we do the opening inventory. Opening inventory 12,500 and purchase. Then we have to do the net purchase. Net purchase, purchase minus, what is it? Purchase minus purchase return minus drawing plus carriage invert. So we have to do purchase and return. Here purchase is how much they are given the purchase. Purchase 97,370. 97,370. Purchase is 97,370. Then any adjustment? Here purchase is the 8th adjustment. We have purchase a computer for office use bought on credit 1st April 2018 costing 1,200 had been debited to purchase account. Actually that is an asset, but they have put as a purchase. So what we have to do? 1,200 we have to deduct. So 1,200 we deducted, it comes 97,110. The total is 109,610. Next, what we have to deduct? Next, goods for own use. So we no need to do like this. We can do together. 97,110. Then we can do together like a drawing, carriage invert, etc. Or you can do one by one. So next, there is any return? No return is given in the question. Next we have drawing and carriage invert. Any drawing and carriage invert is given in the question? Drawing, here they are given the drawing 24,060, but the items given, if the drawing is given inside the trial balance, these are the trial balance details, we never take in the income statement. That drawing we put it on the balance sheet. So this drawing we will not take now. This will not take in the income statement, but yes, the drawing given in the adjustment, here the fourth adjustment we have already noted. Drawing, during the year Lee took goods with a cost 250. This we have to deduct. So drawing less drawing. $250. Amount is 109,360. Next, any carriage invert? The next one in the equation plus carriage invert. So carriage invert we have to add. So carriage invert given in the question. Yes, here given carriage invert 670. Carriage invert is given 670. Any adjustment for carriage invert? No adjustment. So carriage invert we should add carriage invert. Carriage invert is 670. So the amount is now it become 110,030. Now less closing inventory. Cost of sales is equal to opening inventory plus net purchase minus closing inventory. Here I have left it. Minus closing inventory. Cost of sales is equal to opening inventory plus net purchase minus closing inventory. So closing inventory will be given always in the adjustment. So here the closing inventory is adjustment 2. Closing inventory. What is the amount? 21,340. Closing inventory less closing inventory. Closing inventory is, there is any adjustment for closing inventory? Here there was some adjustment. Yes, here third adjustment given. Third adjustment for closing inventory also. Closing inventory given in the question 21,340. But here we have return on basis of sale on return basis. This we are not sold. So this amount we have deducted from sales. When we deduct from the sales, it means the company did not sell this product. So this is the closing stock. This is the part of closing stock. We have to add it back with the closing stock. So closing stock 21,340 plus the unsold item 3,200, also the part of closing inventory because sale or return basis. So 21,340 plus closing inventory is equal to 21,340 plus we have, that is it was the selling price. So we cannot add 3,200. This is the selling price. 3,200 is on the selling price. So how we have to find the cost? Cost is 60% markup. The markup means selling price will be 160. 160 percentage is the selling price. So we have to find the cost of 3,200. So 3,200 divided by 160 multiply 100, because the selling price is after added the markup 60. So that amount is, we have to convert into 100. So it becomes 2,000. So we add 2,000 only we add here. Children, are you clear? Because why we are not taking 3,200? Because we have to take only the cost price, not the selling price. So the amount become, cost closing inventory is 23,340. So our cost of sales is equal to, how much is the cost of sales now? 86,690. So what is the equation of gross profit? Revenue minus, or sales minus cost of sales. Sales minus cost of sales is equal to 161,800 minus then 86,690. So the amount is, what is the gross profit? Please calculate. 75,110. This is our gross profit. So we write gross profit. So one part of the income statement we are done. So how to do the second part? We have to calculate the net profit. How to find the net profit? Net profit is equal to gross profit net profit, or profit for the year, is equal to gross profit plus other income, gross profit plus other income minus other expense. Other expense. So now we have to check if we have any other incomes are in the question. So here bank overdraft capital, carriage invert already we are done. Carriage invert done, inventory done, bank overdraft capital drawing, this all in the balance sheet. Loan interest will take here. Motor vehicle depreciations will take here. Other operating expense are here. Provision for doubtful debts, they are given. So we have to check, that is the expense. Then purchase, trade receivables, trade payables. Here there is no other income, but in the adjustment, purchase, we are already done with the purchase. And closing inventory, revenue, drawing, loan interest, bad debt, provision. Here we can see the seventh adjustment, provision for doubtful debts. Provisions we have to check, that is increasing or decreasing. If it's increasing, we put it under the head of expense, while if it is decreasing, we put it under the head of income. So we have to check the provision for doubtful debts. Provision for doubtful debts given in the question. What is the provision given? Provision for doubtful debts 2,850. Provision 2,850 is the provision. Then the new provision they are given, but new provision always we calculated after deducted the bad debt. Here they are given bad debt also. 690. After deducted the bad debt, we calculate the provision for doubtful debt. So we have to compare the old provision and new provision. The old provision is 2850. Old provision is given 2850. That is the old provision. So you can do that in the workings also. Here we can do old provision 2850. That is in one side. Then new provision, we have to do the new provision. New provision we always calculate in the trade receivables. New provision is equal to trade receivables. If any bad debt, we have to deduct and including the adjustment. So what is the trade receivables? Trade receivables given. Trade receivables, that is given 47,890. 47,890 is the new provision minus bad debt given. Bad debt, and we had one credit customer, adjustment 3. We can see adjustment 3. A credit customer of 3,200. Credit customer of 3,200 we had entered as the sales. So we deducted from the revenue sales and we added with the cost. So this the credit customer means trade receivables or debtors. So we have to deduct the credit customer this amount also from the trade receivables before calculating the provision. So minus 3,200, then minus bad debt. If any bad debt given in the adjustment, they are given the bad debt 690, the debt irrecovered and written off. So that also we deduct 690 bad debt 690. Then multiply 5%. The amount is how much, children? 2,200 is the amount of the new provision. So in the income statement, we check the difference between new provision and old provision. So the old provision is given 2,850 while the new provision is decreased. 2,850 minus 2,200 is equal to 650. Decreased means we treat as an income. This is an income, other income, because we expected 2,850 but the amount is 2,200. That is decreased. That is good for the company. So in the business we write add other income, that means decrease in provision. You can put in the bracket also 2850 minus 2,200. What is the amount? The amount is 650. We add, so it become now 75,000. When we add, it become 75,760. Now we have to less expenses. Less expense. Expense we have to do one by one. Each expense we have to do, including the adjustment. Then we get the profit. So the expense is the first one, any other expense, then interest and bad debt. So expense here bank overdraft capital, no income, that is in the balance sheet, drawing balance sheet. 3% loan interest will do, but after the other expense. Loan interest is coming after the expense, so depreciation also coming after expense only. Yes, operating other operating cost 61,990. So other operating expense, other operating expense 61,990. There is no adjustment given in the other expense, right? It's not given here. Next, other operating expense we are done. Next we have to take loan interest here we noted, and the depreciation also. So provision for doubtful debts already we done, so no need. Purchase no need, revenue no need, trade receivables, trade payables. Next we have to move to the adjustment. Loan interest and depreciation will take after the bad debt and other adjustment. Adjustment 1, that is for the costing supplier. It was the purchase one. We are already done the adjustment 1. Adjustment 1 done. Adjustment 2 done. Adjustment 3, revenue included, the credit customers we done, and drawing done. Adjustment 4 done. Adjustment 5 we have to take for the interest, but after the other expense, bad debt and provision done. Now next, here bad debt 690, that we have to do. Then provision we done. Computer office, that also we have done with the adjustment in the income statement. So then we have depreciation. So we have now bad debt, interest and depreciation only. So bad debt amount 690, bad debt or irrecoverable debt, that we have to enter. Irrecoverable debts, directly given in the question, 690. Next we have loan interest. Loan interest is given. Loan interest, what is the loan interest amount? We have to calculate the loan given. Loan has given loan is 20,000 is the loan given. Then loan interest is given 50, that is 50 they paid loan interest. And next, any adjustment about the loan? 50 as paid, then adjustment. Yes, it's given here. 3% loan was taken out August 2018, is repayable in 5 annual installment. It's starting August 2019. So the repayment is only 2019 August it starts. So 3% of loan interest we have to calculate from 1st August 2018 onwards. So loan interest, loan amount, how much was the loan amount? Loan amount is 20,000 and they paid 50 here. So loan interest 20,000 multiply 3%. 20,000 multiply 3%. Then they had, the loan is taken from 1st August 2018. August to, when is our accounting period end? 2018 May to 2019 April 30. August 1st to April 2019. So August, September, October, November, December, Jan, Feb, March. So we have 8 months are there. The loan is We have 8 months only we have to pay the loan interest. So loan interest is equal to 20,000 multiply 3 by 100 multiply 8 by 12 minus 50. Then minus 50. 50 already they have paid. So how much it comes? This amount is coming 450. The loan amount is coming 450. But already they have paid 50. So the amount will come 400. Now already paid, that's income statement. We have to enter the full amount, not 400. We have to enter the full amount. We have to enter in the income statement. So 8 by 12. Children, are you clear why we are taken 8 by 12? Because August to April only 8 months interest only the business has to pay. So loan interest is 450. Now we are done. Other expense, irrecoverable debts, loan interest. Any other adjustment is left? Adjustment 4 done. Now bad debt done. Loan interest done. Next, computer for office use done. So we are taken this all. Next we have the depreciation. Depreciation motor vehicle 25% and office equipment 10%. Motor vehicle 25%. Reducing balance method. Reducing balance method means we have to calculate on net book value. And straight line method means we calculate the depreciation on cost. So first, motor vehicle. Depreciation motor vehicle. So depreciation motor vehicle. It is on net book value. Net book value means cost minus accumulated depreciation. Motor vehicle, it was 32,000 was the cost. Accumulated depreciation is 8,000. So net book value means 32,000 minus 8,000 multiply, what is the percentage? 25%. So 32,000 minus 8,000. 32,000 minus 8,000 is the net book value. Then multiply 25%. So the amount is 6,000. Motor vehicle is 6,000. Next we have office equipment. Office equipment is on the cost. But there was in adjustment, the last adjustment, adjustment 8. The adjustment 8 has given here. The computer for office use bought on credit costing 1,200 had been debited to purchase account. This we have already deducted from purchase. Why? Because this is related to office equipment. So we have to add this with the office equipment now. And then we have to calculate 10%. So what was the office equipment before? The office equipment amount cost is 4,600. 4,600 plus we have to add 1,200. So it will become 5,800. 4,600 depreciation on equipment. 4,600 plus 1,200, because they are not added this 1,200, it will become 5,600 multiply 10%, because it's the depreciation is on the cost. So no need to deduct any accumulated depreciation. 580. So now we are done all the expenses. Now we have to deduct the total expense. the total of expense is equal to, so now we have to deduct the total expense. So the total expense is 61,990 plus 450 plus 690 plus 6,000 plus 580 is equal to 69,710. This is our expense. So this expense we have to deduct from our, after we added the provision for doubtful debts, we got 75,760 minus 69,710. How much it comes? 6,050 is our profit. So profit for the year $6,050. So question number part A we are done. Next we have to do the remaining part. So let's do our part B. Part B, prepare the following as would appear lease statement of financial position. First current asset, then they are asking us to prepare current liability, next current asset and current liability. Current asset and current liabilities. What is the current asset and current liability? So current asset means what all are the current asset? Bank, cash, inventory, trade receivables. But in this question we don't have bank and cash all, right? But we have inventory, we have trade receivables, bad debt, provision for doubtful debts, right? So we have to check the closing inventory. Current asset is equal to closing inventory. What was our closing inventory? Closing inventory already we are done here in this question. 23,340 income statement we are done. You can see the closing inventory. We already done the closing inventory 23,340. This amount we can take here. Closing inventory. $23,340. Now next we have trade receivables. Trade receivables. We have some adjustment with the trade receivables, right? Trade receivables. We have our trade receivables 47,890, and we had the bad debt. They were given the bad debt in the adjustment 69. Trade receivables 44,000 and not 44,000. Trade receivables was 47,890 was the trade receivables. Then provision 44,000. Then we had at the trade receivables 3,200 was deducted because this was sale or return basis that we have to deduct. Then we have to deduct our bad debt because this is the return of debt. So this both we have to deduct first. So 47,890 trade receivables, 47,890 minus 3,200 minus 690. So what is the amount? That is 44,000. Then less provision. Provision. What is the new provision? Less new provision. What was the new provision? New provision we were calculated here, right? Here in the workings, 2,200 is the new provision. Trade receivables minus sale or return basis minus bad debt. Then minus new provision. New provision is 2,200. So what is the trade receivables amount? 41,800. So total asset, current asset is equal to 6140. Are you clear? Next, current liability. Current liability is equal to, how much is the current liability given in the question? First, trade payables. Current liability means trade payables, bank overdraft. These all are our current liabilities. So first one we have our bank overdraft. Bank overdraft 11,240. Bank overdraft 11,240. Next we have bank overdraft. Then capital loan is the long term loan, but when we have to pay any loan in the short period, that we have to do their loan interest. Capital no, carriage invert, drawing inventory 3% loan, operating expense, purchase. Next we have trade payables. Trade payables 21,640, that is for our suppliers. But in the adjustment 1, they were said about the supplier 2,000, supplier 2,000, supplier dated 28 April 2019, goods costing had not been recorded. So this also we have to add with the trade payables. So trade payables plus 940. Trade payables Q1. Trade payables was given in the question 21640 plus the unrecorded supplier. What is the amount? The amount is 22,580. Next we have to check about our loan. Loan is loan and loan interest. Here the loan thing is coming in adjustment 5 and 6. No, adjustment 5. Loan, 3% loan taken August 2018 and repayable in 5 annual installment. So now in this question number B, financial position 30th April 2019 they are doing. 13 April 2019 financial position how much is the amount? 13th April. So now each one, here the loan has 1st August. 1st August they are taken. Now next they and is repayable in 5 annual installments starting on 1st August 2019. So within 1st August 2019 they are closing the account in April 30, 2019. So April, after April, May to August, how many months are there? May, June, July, August. Only 4 months are there. Not 4 months, 3 months. 1st August, they have to pay the first installment. So that is within 6-month period, all the liabilities are included in the current liability. So this the business has to pay with after 3 months. So after 3 months first installment. What was the loan amount? Loan amount is given 20,000. So 20,000 divided by 5 annual installment. 20,000 divided by 5. 20,000 divided by 5 is equal to 4,000. That is the other payable loan. So we have to do other, not other payable. We have to do the loan repayable. Loan 3% loan repayable. 4,000. Children, are you clear? 4,000. Next, the loan interest was, we are already done the loan interest in the income statement. In the income statement, loan interest we already calculated 450. But did they pay 450? No. They have paid only here loan interest paid only 50 only they have paid. So 400 minus 50, 400 is the liability. That is the other payable. So other payable 450 minus 50. They have to pay 400 now. So the total expense $38,220 is the current liabilities. Clear? Next, state 2 benefits of, the theory is easy. State 2 benefits and 2 drawbacks of operating a sole trader. Sole trader means only one person is the owner of the business. So the full profit he can share, full profit can enjoy. Full profit can enjoy. Then benefit 2, quick decision. Because only one owner, he can take quickly his decision making. Next, what is the drawback? Unlimited liability. Because this is not like a company, there is unlimited liability. Drawbacks 2. What is the drawback 2? Unlimited liability, and it is very highly risky because no one will share the loss, right? Then there is no new ideas. No new ideas. These all are very easy, children. Next, additional information we can see. Lee's friend Marvin has offered to contribute 50,000 to repay Lee's business loan and to provide additional working capital. Marvin has suggested two options. His friend Marvin given two options: form a limited company, form a partnership. If form a limited company, what Marvin says, Lee would issue 125,000 share. One is the price. Marvin would subscribe 50,000. A total 125. Marvin will take 50. The balance will take Lee. And Lee Marvin will become directors of the company and will be paid annual salary. They plan to declare dividend 6%. So 6% dividend also they are planning. Then next, option 2, form partnership. Marvin would introduce capital 50,000. Then what he is asking, which he would receive annual interest, he want 6%, and he would require 30% share of future profits. Future profits he want 30% of future profit also he want. So first we have to check if they are giving the option 1. So you write, if it is option 1, option 1, Lee will get 125,000, the 125,000 minus 50,000. Then Lee get the control of 7, Lee get more share, right? The first one, option 1, Lee get more share. Lee get share of 125,000 minus 50,000 only Marvin take. So 75,000 he get. Then next, dividend. What is the dividend? Dividend cost is 6%. So 125,000 multiply 6 by 100. How much is 125,000 multiply 6%? 7,500 dividend they have to pay. Dividend cost 7,500. This is if they are running a limited company. Then next, third one, limited liability. Limited liability. Why? If he choose option 2, option 2, he want the interest. So what is the interest amount? 50,000 multiply 6 by 100. 50,000 multiply 6 by 100, 3,000. 3,000 is the cost of capital, interest, and he need 3% of share of profit also. So the first one, Marvin's cost of capital is 3,000 per annum to 30% of profit should be given to Marvin, right? It should be given to Marvin. Profit should be given to Marvin. And partnership means unlimited liability. unlimited liability. So children, which is the best? Because option 1, when they are going with the option 1, company, limited liability company. Company means that is more good because limited liability, dividend cost only 7,500 and Lee will get 75,000 share. Marvin get only 50,000. But option 2, cost of capital is there. Option 2 with a partnership, cost of capital is there and unlimited liability. So now you have to give the recommendation. Which option you recommend? Here option 1 is the best, right? So option 1 is highly recommended. So we are done. Question number 1. Total mark is 30 mark. Children, hope you all are clear with today's solution. If you have any doubt, please put in the comment box. Thank you.